Let's welcome in Gaurang, Shah, Ashish Chaturmotha and Sarvendra Srivastava. They're all with us. Market have about 10 minutes to open. We're already in the middle of pre-open right now. Let me start with Sarvendra. Sarvendra, your calls for the day.
Yeah, very good morning. No, the broad view that we carry right now at 5 cents is broadly negative, and that is where probably the trading calls will also emerge from. So we have two calls which are all on the sell, both of them on the sell side. The first one that I have for the day is a sell on Axis Bank. The rationale being that I think the private banking space now probably seems stretched. Names like Yes Bank, Indus, Axis, I think the run-ups have been decent and equally sharp from the lows. And that is where that space probably could undergo a 6 to 8% correction. So the first name that comes to my mind from that space is Axis Bank. I'd like to short sell that for a target of around 565. So mind you, these are trading calls right now, and these are not positional medium-term calls. These are purely trading calls. So keep stop losses there. 565 is the target, and 592.60 is what I would put as a stop loss on that one. The next one again from a space that has equally run up, and that's been a space that we have always liked over the last many quarters now. That's the metal space. I think clearly running out of steam in the sense that this entire move on names like Vedanta, Hindalco from 70, 80 levels to wherever they are, Hindalco at around 150 and Vedanta around 170. I think that move, one particular leg of that move seems to be over, and the stocks seem to be pretty overbought now. So again, corrections there also ranging in the region of around 6 to 8% possible. So I'd like to probably short sell one name from there, which is Hindalco. Look to sell for a target around 145, 143, and keep a stop loss at 163.60 on that one.
And what's the trading horizon, Sarvendra?
1 week to 10 days, probably.
1 week to 10 days.
Yeah.
1 week to 10 days. And I'm going to pick that up and actually go to Gaurang Shah, because I think that Gaurang Shah would be very happy if Axis Bank actually goes down, right, to the level that Sarvendra is saying, that if it actually goes to 565, Gaurang, you would be happy because you have a buy call there? And obviously that's a longer term buy call.
More than happier. On India, I'll be more than happier. And if I have to buy Axis Bank at a higher level with an MCV load, I would buy an HCV load in case if it goes to those levels as Sarvendra is speaking. We are extremely positive on the private sector banking space. We believe that the worst of the time for the banking space, both the public as well as private, is think of the past. And we have a target of somewhere close to about 620, 650 odd levels. These are all medium to long term calls that I am sharing with you on India.
Yeah.
And as a disclosure, we have shared Axis Bank as an investment idea with our clients as well. So yes, I'll be more than happy in case if it goes down to buy more.
Right. And you have another private bank. Give our viewers that as well.
Yeah, so that's ICICI Bank, again, consolidating at 250, 260 odd levels. We believe the numbers that the bank has delivered were not as exciting as market participants expected, including us. But we are equally optimistic about the statements that have come out from the management post the first quarter number this fiscal. And we are of a belief that private sector banks are much more proactive in terms of decision making in case of any bad asset or loan, or even if they have to go and sell it to an ARC. Our target stands at somewhere close to about 320. Again, on India, this is a very conservative target. If the backdrop improves, then we will revise our target upwards.
And these are what, 6 month or 1 year targets?
These are all 6 months to 1 year on India.
6 months to 1 year target. All right, I'm going to come back to you for your third call, but because we have a bit of a confusion on Ashish's calls. Ashish, you have a call, you have a buy on, is it on HDFC or HDFC Bank? Just wanted to clarify that.
Hi, good morning. It's a call on HDFC Limited.
HDFC, all right, okay. Just take us through that one.
Yeah. So see, if you look at HDFC Limited, the stock is trading near its all-time high, and it has been consolidating for last 2-3 weeks in a range between 1410 on upside and 1360 on downside. I think this stock is in a has consolidated well, and now we can see a very strong up move coming in the stock. So one can initiate a long position in the stock with a stop below 1355, and on upside can expect a target of 1435 in next 4 to 5 trading sessions.
All right. Let me get one call in from Sharmila as well right now. She's also with us. Tata Motors DVR. Why DVR and not Tata Motors, Sharmila?
Well, I think for retail investors, DVR makes more sense than Tata Motors. Also, I think one of the logic that I use while recommending DVR is that at some point in time, the discount gap that is there between Tata Motor and DVR should close, and it does close. You do get these periods when it closes. DVR is also now part of the Nifty. It's fairly liquid, so there's no concern over there. You do see even institutional buying coming into it time and again. So I think it stands to reason that, you know, if my longer term target on Tata Motors is closer to 580 or so, then for me to really have a target of 400 on Tata Motor DVR is actually very conservative, and it should actually be a much higher target.
So effectively, should one book profits if that discount closes up?
I mean, it doesn't, see, if you're a retail investor, if you're getting more dividend and you're not concerned about voting rights, why would you want to switch? I mean, you should, the call should be whether you want to invest in Tata Motors or not.
Right, because sometimes you can have voting rights of about 2% and still make no difference. So why bother? All right, Ashok Leyland, you also have that, Sharmila. And then I'm going to go to Gaurang because he has something which is in the supplier space to auto. Ashok Leyland, numbers were a little disappointing, but you still think that it's worth holding on to it?
Yeah. Well, you know, honestly, I think the reason why I've really gone with DVR as well as Ashok Leyland this morning is also the fact that you might be hearing about a new scrapping policy, and that will stand to gain a lot of these, you know, CV makers, because as you said, you know, numbers have been a little soft. So you do get a feeling that maybe that you won't get the kind of growth that we've been seeing, say, in Ashok Leyland in the early part of the year. But I think if you were to hear anything on this scrapping policy, then I think it will add a new lease of life to all the large CV makers in the country. Also, I think Ashok Leyland, you know, because of the soft numbers and sort of an indifferent quarter, hasn't really gone anywhere. I mean, you know, it's sort of stuck in that 85-90 kind of band. So I think if once you see that that the possibility that numbers could be strong going ahead, I think it could retrace back to 115 levels.
Okay, let me go back to Gaurang, and Gaurang also has Bharat Forge. What's the play? Are you looking at defense? What are you looking at right now for Bharat Forge?
Well, Ananya, if you're looking at fundamental, then you have to look at all the angles on the positive side. And this is, by the way, not a 6 months, 1 year call. It is a longer term call, 1.5 year, 2 year kind of time horizon, keeping that defense foray in mind, and tremendous excitement and traction on the upside on the defense front. And my sense is that whatever order comes through is going to add to the positivities in the near term. However, having said that, immediately on the medium term outlook or a little bit 1 year kind of time horizon.
Because Gaurang, 960 currently trading at about 860. That's about what, 11.5% return in 1.5, 2 years. I would probably get more on a fixed deposit, right? So is it buy on dips?
Well, if you want to go into fixed deposit, why do you want to come into the stock market on India?
I say that obviously you have to pay. You should, the risk premium you're paying for being in the stock market, one needs some kind of a higher return, right, compared to what you would get in a fixed
deposit. Allow me to complete. Sorry. These targets of 960, it may look 10-11% from the current levels, but as the defense foray plays in and starts contributing, we are definitely going to revise the target upward. It's a very conservative target on all the three investment ideas that I've shared with you on your channel and your viewers. And the best part is, Aninya, that this quarter, when the numbers came for the first quarter, it was disappointing thanks to the Class 8 truck orders, which were close to about 36 or 38% downtick quarter on quarter. And it was one of the worst number on the downside for the Class 8 trucks as far as the US order market is concerned. But we are, stock reacted on the positive side on the same day when the results were out.
Right.
So our understanding is that all that negativity as far as the export market, chassis
we'll come back to you, Gaurang, because the markets are about to open. Pankaj is going to just focus on what's happening in the big cap space. Pankaj.
Right, so we have the opening bell 16 points higher, slightly lower than what SGX was indicating, 45 for Nifty. Hindalco flat with a positive bias, ITC up about 2 rupees. BOB up close to 1 rupee, 164. BPCL up about 3 rupees or so, 0.42% higher. Infosys absolutely flat. HCL Tech 1% higher, 8 rupees. Cipla up close to about 2 to 3 odd rupees, 569. Lupin up about 3 rupees. Aurobindo Pharma was the top gainer yesterday. It's the top gainer today as well, 8 to 9 rupees higher for Aurobindo Pharma, 1% higher. HCL Tech 1%. We spoke about the Analyst Day meeting that they have, which people were taking in positively. So 7 to 8 rupees higher, 31,000 as far as HCL Tech is concerned. Bajaj Auto up 1%, 2,900, about 3,000 shares traded for Bajaj Auto. So one would say that they would wait for the volume pickup, or one should wait for the volume pickup before seeing any move. Wipro is among the top loser. No particular news for as far as Wipro is concerned, but it's down 17,000 shares. Again, volumes are not that great, so we'll need to track what's happening with volumes. Grasim is down. There is a downgrade which has come in, but it's not a sell sort of a downgrade from CLSA. NTPC is down about 0.3, 0.4 odd %. Not much to read into this. AstraZeneca as a stocks in news. They have discontinued some of their drugs because of global changes. It's down about 6 odd %. We'll just get the details of how much that drug contributed, but it's down, and it's down quite significantly, 6%, 71 in terms of the total price. 8,000 shares is what AstraZeneca is trading at. Let's look at IDBI Bank as well. They are looking to raise some funds. So 1.4, 1.5% higher. Monsanto has said that they will discontinue their new GM production. It's down about 2%. I think Kaveri should also have an impact on that, but Kaveri is up about 1 odd %. Manappuram Finance, 85, 86 for Manappuram Finance. So that's a name which is doing absolutely flat. Let's look at Natco. Natco is up 2%. We spoke about the drug and the possibility that they may launch that drug earlier, or at least the clarity on that drug is higher, so it's up about 1.4 odd %. Let's look at Dr. Reddy's. Dr. Reddy's is almost up 0.29%, so absolutely flat in terms of opening.
All right, let's look at the counters which have the maximum turnover. As usual, we're going to pull up the 50 top turnover counters right now and look at the ones which are gaining the most. PNC Infratech, where it was on the buy list of Pankaj Sharma yesterday when he joined us, and the numbers came out after markets opened and markets shut, and their PAT has gone up by 250%, and that's the biggest gainer, 9.3%. Jubilant Life Sciences, that's up 4.2%. Tata Global Beverages, they're going to be entering the dairy space, which is becoming hotter every day. Man Infra, the profits have more than doubled. That one is up 2%. Natco Pharma, Pankaj mentioned why that's up. India Cements is up about 1.9%. IDBI, Pankaj mentioned 1,500 crore fundraising. That's up about 1.5%. Wockhardt, 1.5%. Engineers India Limited continues its good run, 3.3%, 1.3% up. India Bulls Real Estate up about 1.2%. Axis Bank on the buy list of Gaurang Shah up 1%. HCL Tech up about 1%. Eicher Motors up 1%. The biggest loser right now is JK Tyre and Industries, and I want to ask Gaurang about that as well. Infosys correcting a little bit today, 1/4% down. BF Utilities, it was up 2 days ago, down marginally. SBI marginally down, but overall the bias is positive in the markets, but flattish now, not as we had initially expected. The Nifty is doing 86.66, which is the first resistance of the day, 86.67. So it stopped there and didn't hit that 86.84 that we were looking at. Okay, let me pick up one of these that I was talking about, and that is JK Tyre. Now, Gaurang, do you cover that at all?
I'm sorry?
JK Tyre, do you cover that at all?
Yeah, in India, almost all the tire manufacturing companies feature in our positive universe. JK Tyre, CEAT, MRF, Apollo Tires, all 4 companies are under our positive coverage. That's a disclosure. And, Ananya, if one is bullish on the auto sector, I don't see any reason why they should be underweight on auto ancillary and OEM segment, because they are going to be the beneficiary of new order as well as the replacement order market. And my sense is that, after a great outperformance, thanks to the lower commodity prices on the rubber, now the prices of rubber in the commodity market have started to inch up a little bit. Now, under all circumstances, what we have been given to understand is that in case if there is any meaningful increase in rubber prices and thereby resultant in the finished product prices moving higher, all that is definitely going to be passed on to the end consumer. So our sense is that the margins are going to remain intact, and definitely there is going to be traction in terms of new order market, domestic as well as export. Hence, we are positive on auto ancillary segment as well.
All right. But I just want to get a sense on the reason I'm asking about JK Tyre, and I'll go to Sharmila as well about this. JK Tyre currently, trades at just 5 odd times FY18 earnings. I know it has a biggish debt on its book, about 2,800 odd crores is on its books. But if you look at its EBITDA and the coverage that it has, it's not bad. And with an estimated EBITDA of about 1,450, 1,500 crore, it's a decent EBITDA coverage that you have on its interest coverage ratio. Sharmila, JK Tyre selling so cheap when the rest of the market is so expensive. What's the reason?
I think a lot of it has to do with the fact that this is a sector that's really struggling with cheap imports from China. So, I think that has been a big concern for a lot of these companies, that you have cheaper tires flooding the market space, Chinese tires. And I think one of the reasons why we are sort of seeing life get back into these stocks is the fact that there has been some noise of late that there could be some anti-dumping coming on that as well. Because, I think that, I completely agree. Like the way, earlier the sector sort of benefited because rubber prices were lower, and you could see that effect playing out in their margins. And the win-win picture for them would have been if demand had been good and rubber prices would have been lower, which is something what we are getting now, because you are seeing a good strong demand for whether it is passenger vehicles, commercial vehicles, two-wheelers, all the numbers are strong. So the demand certainly, I think, is slowly inching up, in that 8-9 sort of a percent range. And prices are still reasonable. They have not gone up too much. But the stocks are trading at lower valuation simply because they are facing this immense competition from cheap Chinese tires. And I think if something could be done about that to protect this sector, then I think you will see a lot of these stocks take off again.
I'm just comparing it to, the reason I'm asking you again is that if I compare it to something like an MRF, MRF actually trades at a much higher multiple of about 9 times, and JK is trading at 5 times. Of course, MRF's JK's debt could be the big game changer. If I look at CAT, for instance, even that is trading at a much higher multiple. I know there's been a bit of a gain in this stock right now, and that's why I would like to get Ashish into this. Ashish, do you track JK Tyre at all as a counter, technically?
Yeah, definitely. See, if you look at in last couple of days, we have seen a very strong momentum in the stock, and yesterday we saw a very strong up move coming in the stock with very, very heavy volumes. Now, the way this stock has been consolidating and has given a fresh breakout, I think stock has a potential to cross its previous all-time high, which is around 164, 165 levels. And once that happens, I think stock has further potential to test 200 odd levels. So I think this stock can give a 30 to 40% upside returns from current levels.
Would you call JK Tyre a buy at this level?
Yeah, definitely, because if I'm talking of a 30 to 40% upside, then definitely I think this stock has a potential to give a good return. So one can definitely initiate a long, can initiate some positions at the current levels and use any dip towards 115, 112 to average on the positions. On downside, I think 105 should be the positional stop loss for going long in the stock.
125 is the positional stop loss for going long in the stock. Right now it's at about 123. But would you take off some profits at about 130 odd?
No, I think it's a fresh breakout. So as I mentioned, with a stop of 105, one can expect a target of 170, 180 in short term.
Sarvendra, do you have a view on JK Tyre? I'm specifically asking JK Tyre because fundamentally it sells at a discount to other tire companies. I mean, as Gaurang was pointing out, that if there is a recovery in auto, we are betting on auto, we are betting on two-wheelers, we are betting on consumption revival, tires shouldn't be far behind. Do you have a technical call on it as well?
Yes, I think medium to long term, the shape of the price chart is pretty positive. But the only thing is that within this run up from 100 to 122, it's been like a week's time that the stock has gone up 22%. To get good risk rewards, probably you want it to correct. So you will want it around 108 110 around that 110 mark, I think the risk rewards would be slightly better. So if I have to enter, I would probably enter at that 108, 110 mark on JK Tyres. But yes, overall the medium-term structures are looking good. So a 155 to 160 target possible over the next 6-9 months, definitely possible.
Okay, Ashish, we managed to take one of your calls before markets open. Just give us two more calls. They are running on the left of your screen, but the two other calls that you have, just explain them a little bit.
Yeah, so the other call would be in housing finance company. As I have been mentioning for last 2-3 weeks very aggressively about most of the housing names, and within that space DHFL, that is the Dewan Housing Finance, is looking very, very strong. Stock has now reached near its all-time high, and we have observed a very strong open interest addition in last couple of weeks in the stock. So I think this stock has a potential to give another 8 to 10% upside from current levels. One can initiate a long, keeping a stop below 272, and an upside can expect a target of 310 in next 7 to 10 trading sessions. My other bet would be in a NBFC company and a finance name, that is Reliance Capital. Now, if you look at Reliance Capital, again this stock has been consolidating in a range between 480 to 420 on downside. Now it has given a fresh breakout above 480, and this breakout has come with a very strong open interest addition. We have seen a very strong rollovers in most of the ADAG names. So I think this stock has a potential to give another 7 to 8% upside from current levels. One can initiate a long, keeping a stop below 465, and an upside can expect a target of 530 levels.
Right, Welspun India has come out with another clarification to the exchanges today, which they'd done already on the 20th. So 5 days later, they've sent it again, saying that they're getting that entire process. That entire process, it's down 10% again. So I guess 2 more days of 10% it can do, and then it goes into the 5% circuit limit, lower circuit limit. They have said that they're getting that entire process audited. 10% of their top line comes from Target, and it accounts for about $90 million, 10% of their overall business. And the specific sheets that they're talking about is about 1% of their overall business, $8.5 million. But Welspun is now in almost a downward spiral. Gaurang, Welspun, we've spoken about this earlier. If it keeps going down like this, 4 more days of about, if it goes down for 2 more days of 10% down, then it comes to 42 rupees, from 102 rupees down to 42 rupees. You have 2-3 days of 5% down, you'll probably have the stock at about 30 rupees. They say don't try to catch a falling knife, but is there any logic in trying to do that?
Well, it's already done 20, 20, 10 and 10 if I'm not mistaken.
Yeah, it has.
It's rather unfortunate, first of all, on India, that the company's management took such a long time to come out and give a justification or a clarification or support or give any reason whatsoever, be it. And not to forget, Target is more than 15-year-old client of Welspun India. Along with that, you have the JC Penney's and the Walmarts of the world, which have come out and given certain statements in terms of inspecting the product which has been supplied by Welspun India. Now, I don't understand what went wrong through that quality control process or certification process, which happens to be an integral part of such a company who is one of the largest supplier into the Turkish towel or bedsheet, which is made out of the Egyptian cotton. So I would say that there is, first of all, too much of news flow. Clarifications are not helping. Stock is locked down 10%. Maybe if there is some more cancellation of contract from other large client base of Welspun India on the international arena, I'm quite sure that there is going to be more damage that is yet to be seen. So unless you are a great fan of this particular company, and if you want to buy it with that risk appetite in mind that the stock can further correct,
of course,
maybe
you can't even buy it,
10,
right?
15,
because
20%.
it opens 5%, 10% down, it's almost impossible. Pankaj has some information on that. Pankaj.
Yeah.
Right. Gaurang, I just wanted to ask that, does this become now a sector concern? As of now, only Welspun has corrected, but can it have a spillover effect on similar companies?
Well, I hope not, Pankaj, because that will lead to a catastrophe, if I can put it that way. And it's not appropriate to generalize that if one particular company has a problem, all the other companies also follow the suit. Maybe they are much better off, and maybe with this episode, which has unfolded unfortunately, they would have taken guard and precaution to even strengthen their quality checks and control further. I don't see any reason why I should doubt any other company in the similar sector will be following the suit as to the fate of Welspun India. And it would be premature to even assume that, Pankaj. So, and we heard certain clarification from the competitors yesterday as well, and even day before, that their quality control and checks are well in place. And I hope that something like this doesn't unfold on them as well.
All right, Sarvendra, again, as I was asking Gaurang, if I look at Welspun, it's impossible to even buy that counter, obviously, because it opens down 5 on the circuit. You can't do anything about it. But, a counter like this, when you look at the chart, on the face of it, there's some support around 40, some support around 30. But does a counter like this, when it's moved by news of this kind, actually end before it goes down to something like, in Welspun's case, 9-10 rupees?
That's a difficult one. See, when corporate governance issues and when there's trust which is at stake, this market penalizes very strongly, and that is what probably is happening with Welspun. The trust factor, when you lose that and people start fearing, then the stock is coming down on its own weight. There's not been much volumes, but the stock is still coming down on its own weight. That's the problem with such stories and such instances. So my sense is that I would not like to touch it, and what I can tell you is that someone was selling this stock for the last 1 month. So probably someone had some whiff of something like this coming, because last 15-20 days this stock was clearly being sold into.
Right, absolutely, and there was no reason to sell it. You're right, and Indian markets are full of rumors and stuff like that happen. But you have a view on this at all, Sharmila? I mean, Welspun, one of the things that we learn nowadays that more than PE, more than relative valuation, more than ROE, ROCE, what matters is corporate governance and the management. But this is all hindsight. Hindsight is 20/20. You suddenly are hit by this, and probably just to give them the benefit of the doubt, they probably don't know where it came from.
Well, I think in that sense, this is clear, pretty clear cut. I don't think that they won't know at the end of the day where it came from, because I think that just as Target has its quality checks, I'm sure even Welspun must be having in-house quality checks. So obviously, something has gone wrong somewhere, either deliberately or there is a slip up of a really gigantic sort of proportion somewhere, and we will know what the truth is, hopefully. Once, though I honestly doubt that. I think this is something that will just over a period of time, we won't really end up with too much clarity. I think the only thing that I want to add is that, on the first day when it was sold, everything that was sold was sort of delivered. So, there is a sense that in that 20% down, somebody has taken delivery of stock. I haven't seen the delivery data for the last 2 days, but maybe in a sense, if the management has enough sort of confidence in the fact that they can sort of ride this one out, it might be a good idea for them actually to buy whatever comes at that lower circuit. So let's wait and see where this goes. But this is just one of those things that you'd rather wait for clarity before you really step into buy, because at the end of the day, I think you do need some logical sort of a reason why this happened in the first place. And I completely agree with Pankaj. I think we are not out of the woods in terms of there other sort of players getting a sort of a sentimental impact of this. And I hope that their systems are in place in terms of quality control, because I think that just as it happened with pharma, I think when you become a reasonable size in terms of sales or turnover in the US environment, you are going to attract that greater attention for quality control. And then you have to be sure that you are there to really meet the kind of things that you have signed up for. I think that I wouldn't really be so sanguine that no other player is going to get affected, or none of the other competition. I mean, the other peer group is also not going to get examined. I think that is something that
exactly
will
the question
play out over
I
the
think
next
we'll
couple
be
of months.
posing to Kailash R. Lalpuria, who's you can see that on your left hand side, ED of Executive Director of IndoCount. They're coming up next. Thank you so much, Sharmila. Thank you, Gaurang. Thank you, Ashish. And thanks a lot, Sarvendra, for taking out time.